Next up is a very dear friend of mine who would like to see Powell fired and is interested in the position himself. His name is David Malpass. He's former head of the World Bank. Before that, he was Undersecretary of the Treasury. He's scrapping in here. Here's my buddy. Op-ed piece, the Fed is behind the curve on cutting interest rates. Maybe we have a tear sheet. It was out a few weeks ago. David, they are behind the curve. Why are they behind the curve?
Larry, their models are wrong. Thanks for having me on.
My pleasure.
So the Fed actually wants to fight growth. Their whole concept is if you overheat, then you should have high interest rates. The problem is that undercuts production. So if we're working to have a manufacturing economy where people invest in the U.S. and we're the hottest economy and money is coming in, why are our rates way higher than Europe and Japan? Doesn't make any sense. If you have a hot economy, you should be cutting, and you can cut, and the money will beat its path to your door.
I don't see any inflation. I mean, we've had new inflation reports for June. CPI less than 2%. PPI is practically zero for the last 5 months. Where's the inflation?
There's not inflation, so that's an opportunity to cut, but their models are screwed up. They've always been too late. If you look back into the 1990s and the 2000s, they were a lagging indicator of the reality of the world.
That's what Trump says. By the way, you say it in here. It's a very interesting thing. The Fed is looking through the rear view mirror. What you mean by that?
A phrase you invented, and it's a brilliant phrase. So if you're driving in your car and you're trying to drive forward and you're looking back, you're going to get it wrong. You're going to run into things. So the Fed repeatedly runs into stuff. It hurts, and I really think we need a remake of the Fed that gives us a growth basis for small businesses in the U.S. That right now, the Fed, they've paid, people don't know this, $1.3 trillion to banks and money market funds so they can maintain this huge portfolio of theirs. They're just in the middle of, it's a temple.
And they're losing money.
They're
losing money.
They're losing money, and they're paying out cash flow. If any hedge fund did that, they'd be fired.
Listen, they're doing what that Silicon Valley Bank did. There's the same thing, right? Portfolios underwater. Their interest expense is greater than the interest they take in. It's unbelievable. And they have the printing presses.
The Fed is the deepest of the deep state. So to retrench them, to get them out, is going to be lots of work. But I think you have to do it from a model standpoint. We need a growth model.
Change the model for me.
Change the model.
Change the model for me right here. What would you do?
Higher interest rates they stop the production in the economy. Lower interest rates will make it go. So a starting point is that. Also, the inflation targeting is the wrong metric. There's no way to actually calculate and keep track of inflation, and it's so lagging. It really is last year's number. So we're seeing whatever inflation we did have now would be Biden's inflation. So looking forward, you've got to calculate the energy dominance, the crypto dominance that the U.S. can do. The dollar as a reserve currency, money will just flood into the U.S. and support lower rates across the yield curve. We're talking about the 10-year bond yield going down along with the short-term interest rates.
And the technology revolution, the AI revolution, the base power revolution, all this. I don't know. He's got thousands of economists, Jay Powell, chair, we're calling him. We got that. What do they explain? They're like missing the whole story of modern day America.
Economics is the dismal science. They really don't like it when we grow. And a problem, and it really makes me mad, is the Fed has been supporting this income differential. If you think of why are median income down? Think through the Obama years, horrible years for the American worker, even as the Fed was printing or expanding their balance sheet.
Yeah, yes, sir. All right.
We can change it. It can change overnight by Trump.
David Malpass, the Fed is behind the curve on cutting interest rates. Its flawed models depend on slowing growth to avoid overheating, whatever that means. Thank you, buddy. Appreciate it very much.